So good afternoon, everybody. Welcome to this IHSCM event. Today we're joined by Will Ellis, Director of BW Surveyors. He is here today to talk around succession and retirement planning, what to do with your premises. We've got somebody, Will. Fantastic.
Excellent.
I'll just let Lorraine come in and then you can go from there. That's the beauty of editing.
Brilliant. Right, hi there, good afternoon all. Thanks for that, Jade. So yes, welcome to Succession Retirement Planning, what to do with your premises. So my name's Will Ellis. I work for a company called BW Healthcare Surveyors, as Jade has just said. So we specialise in kind of helping practices with a wide variety of premises matters. But today we're going to be concentrating on succession planning and the premises. So we're going to be going through a few things. We're going to be talking about what options you have and what to do with your premises when you're thinking about succession and retirement planning. We'll be talking about one of the options in a bit more detail, so sale and leaseback. So we'll be going through the pros and the cons of sale and leaseback. Another alternative option, putting a lease in place as opposed to perhaps selling the surgery if when you retire, when the GPs retire and leave, if they're wanting to retain their asset, then they can perhaps just become landlords themselves and put a lease in place. So we'll talk about that option in a bit more detail. Also, the option of transferring the NHS contract to another entity. So upon retirement, if that leaves the practice with no GPs at all and the threat of potential closure, then it's potentially looking at options around transferring the contracts to other organisations like PCNs, GP federations, or even third parties. So we'll talk about that a little bit as well. And then something slightly different, just talk about how to perhaps maximise the value of your GP practice. So perhaps in anticipation of selling the surgery, we'll talk about how to make sure you get the best value for the premises and the highest price when selling it. And then it's just a Q&A at the end, basically. So we'll have a discussion at the end. Right, okay, so first slide, what to do with your premises. So as I said, you've got several options when deciding what to do with your premises upon retirement. The first one, like everybody's doing at the moment, is trying to find new partners. So that is finding new GP partners. They don't necessarily have to be GPs these days. So a lot of contracts have now been awarded to alternative partners. So things like nurse partners, pharmacists, practice managers. So there are alternatives. So if you are struggling to find GPs wanting to buy in, then you can consider perhaps other staff members becoming partners as well. And practices are actually looking at innovative ways of getting partners on board, because I think one of the big issues, certainly in owner-occupied practices, is finding partners who can find the funds to buy into practices, struggling to pay what is normally hundreds of thousands of pounds for perhaps a 10, 15, 20% share in the premises. So what you can do, and what a lot of practices do now, is what we call gradual buy-ins. So rather than a partner having to buy in full, so let's say they were buying in for a 25% share of the premises, rather than buying the full 25% in one go, they could perhaps buy 5% over every year over a 5-year period until they reach that required amount. So it's just ways around really to try and get partners in is the first thing to think about, I think, when upon retirement. But failing you've exhausted all possible solutions in terms of getting partners in, really struggling to recruit, which just seemed to be a nationwide problem at the moment. One of the options you've got is sale and leaseback. So sale and leaseback is where you would find an investor, you'd sell the surgery effectively to a third party investor, they would become the landlords, you'd put a lease in place, you would still run the practice, still hold the contract and become leaseholders instead. So it's just a good way of releasing equity in the premises. Alternatively, as I mentioned, you can put a lease in place. So as the retiring partners leave, they would become the landlords and lease it to the existing and the remaining partners. So putting a lease in place is an option as well. You've got an option as merging with another practice. So again, it might be worth considering speaking to the ICB, your local PCNs, your local federations, to see if there's any interested local practices that you could potentially merge with. And merging with a larger practice or merging with a practice with a younger GPs would enable them to perhaps take over your existing site. So when the retired GPs leave, they take over, hold the contract, and run it from there. So just merging with the practices could be a decent solution as well. Transferring the contract to another entity, as I've just mentioned. And then the last option is closing the surgery and selling the premises. Obviously not what anybody wants to see happening. It's actually one of the main reasons why we put this presentation together in the first place, was because we were speaking to practices who had to make the decision of closing the surgery. And some of the things that we're talking about today, they hadn't actually considered themselves. So we thought, well, there's obviously an issue with education, perhaps practices aren't aware of the options that they actually have. So we put this presentation together. So the idea of this effectively is to stop practices from having to close. So that is an absolute last resort, and hopefully we can give you plenty of options to avoid that in the future. Okay, so they're the main options. Delving a little bit deeper into one of those options, one of the main options, which is sale and leaseback. So we'll talk about some of the benefits of sale and leaseback, or certainly some of the reasons why practices decide to go through a sale and leaseback process. So the rent that you pay the landlord is going to get fully reimbursed by the NHS. So again, when you go through a sale and leaseback, the surgery is going to be owned by a third party landlord, and you'll have a lease in place. You'll receive rent from the NHS, what is at the moment, if you're owner occupied, your notional rent. So your notional rent payments will effectively be exactly the same. You'll still be reviewed every 3 years, but those payments will come to you still, but then you'll pass them on in full, normally in full to the landlord. So but you'll never have to pay anymore, or at least you shouldn't have to pay anymore. There are horror stories up and down the country where practices have had to pay more to landlords, but the main reasons for that is because they didn't get the correct representation and the correct assistance through the process. So as long as you instruct surveyors like ourselves or solicitors to assist you through the process when you're putting a lease in place, we can ensure that there are necessary clauses and protections in there that state the rent cannot go above what you get reimbursed from by the NHS. It can also, sale and leaseback can also reduce the perceived risk and responsibility of property ownership. So under certain circumstances, the landlord would actually be responsible for some of the repair and maintenance obligations. So under a standard lease, the landlord would be responsible for the external repair, and the tenants are going to be responsible for the internal repair. So effectively, you'll no longer have to worry about the external repair and maintenance of the premises because it's the landlord's responsibility. Now, what does sometimes happen in primary care, and a lot of landlords, certainly a lot of the larger landlords, don't actually want that responsibility. So you may find that when you go through the process, they'll actually back that responsibility back to the tenant. So it may be that you as tenants are still responsible for the internal and the external repair and maintenance of the premises. But if that is the case, then you can actually retain a proportion of the rent that you receive from the NHS. So rather than paying it in full to the landlord, let's say you're receiving £100,000 in notional rent, or what will be actual rent when you lease the surgery, you're receiving £100,000 from the NHS in reimbursement. You would normally pay that £100,000 onto the landlord. Now, if you're taking on the landlord's responsibility in terms of the repair and maintenance, you can hold back somewhere between 5 and 7.5%. So rather than paying 100,000, you just pay the landlord 95,000. You keep that £5,000 in the sinking fund and use that money if any repairs and maintenance are needed for the external part of the building. So either A, the landlord's going to be responsible for the external repair, or B, you will still be responsible for it, but you should have that money stored away in a sinking fund to cover any repairs and maintenance of the premises. Okay, so number 3, it's going to remove the burden of ongoing capital investment. So because it's not your premises anymore, because it's owned by an investor or by a third party, it's their responsibility. So if you needed any upgrades, improvements or extensions, it's up to the landlord to make those payments and do the works rather than yourselves. Sale and leaseback can also help attract new GP partners. So the idea of that being that because you're no longer in an owned premises, incoming partners aren't having to buy in. They're not having to find funds to buy into the partnership. They just simply have to be signatories on a lease, effectively. So sign a piece of paper, be signatories on the lease, and it's as simple as that. It's a far more straightforward process, and we have seen that leasehold premises do seem to find it a little bit easier to find GP partners than those in owner-occupied premises. It's not a magic wand. There are still issues with leasehold because incoming GP partners still have liabilities. It's still a liability signing a lease. So it's certainly not a magic wand, but it is just seen as a little bit easier when you're in a leasehold premises. Number 5, so having a lease in place will generally create a higher premium value of the property rather than owner occupied. So if you're in an owner occupied premises and you've ever had evaluation for a partnership change. When we're valuing it under a sale and leaseback, it does tend to be valued a little bit higher than as a standard partnership change under an owner-occupied premises. And the main reason for that is because you've got the assigned lease in place. So at the moment, if it's valued as an owner-occupied surgery, an investor comes in, there's actually no security there that the surgery is going to be there and that rental payments are going to continue for any longer than perhaps 12 to 18 months. When you've got a lease in place, the tenants are under a contract and under agreement an obligation to pay that rent for the length of that lease. So if that lease is 15 years, an investor is going to come in, purchase the premises, and they're going to know that they're going to get that rental income for the next 15 years. So two of the main factors when determining the value of a practice under sale and leaseback are the rental income, so what the rental income is, so that's notional rent and any third party incomes, maybe pharmacies or dentists. But then the second thing is the length of the lease. So the longer the lease you can sign up to, the higher the value of the premises is going to be. Number 6, so it can also assist with improvement works, extensions, or even new developments. So I would say this is one of the big reasons why practices go through a sale and leaseback, is because perhaps they're in need of upgrades or improvements, or they need an extension to the premises, or even they've just completely outgrown their existing site and need to look at new developments. But they've exhausted all opportunities themselves. They've approached the ICB. The ICB can't help. They can't fund it themselves. They can't get funding from the ICB. Getting a third-party investor in can be a great solution to that, because a lot of these investors are very interested in maximising their return of investment, increasing the notional rent, which is going to increase their rental income and going to increase the value of the premises. So quite often you can have these written into the agreement that they agree to purchase the premises, but they also agree to spend X amount of money, £500,000 in building an extension, or they agree to assist you with potential relocation into a new development as well. So if that is something that you are considering, I think, yeah, the solution of getting a third party investor in is certainly one to consider. And then the last point is, you will, in most cases, the tenant will have protected rights for a new lease upon expiry of the existing lease. So effectively, if you sign a 10-year lease, when that lease expires, you will have an automatic right to renew the lease for another 10 years. It has to be under the same terms as the original lease, but effectively it just stops the landlord from signing you up to a 10-year lease and then kicking you out and getting another tenant in. You will have protected rights to make it very difficult for the landlord to do that. Okay, so they're the kind of upsides of sale and leaseback, some of the benefits, some of the downsides, or certainly some of the things you're going to want to consider before you go through the process. So when you sign a lease to an investor, it can restrict what you do to the surgery. So if you did want to make any upgrades and changes and things, as I said earlier, that is the landlord's responsibility, but it is also up to them as to whether they want to proceed with it. So you will have to ask permission to make any changes to the surgery. There may also be specific obligations on the practice within the lease. So the lease might stipulate that you have to redecorate the surgery every 3 to 5 years. There will also most certainly be a clause in the lease that says you have to keep it in its current state of repair. So whatever the state of repair is on day 1 of the lease has to be the state of repair at the end of the lease. Otherwise, you can face financial penalties. Ultimately, you'll probably be asked to bring the surgery up to its original state of repair. So there can be issues with that. So it's just ensuring when you sign a lease that you're fully aware of all your obligations. There will also be liabilities under the lease, including rental payments. So if you sign a 15-year lease, you are effectively agreeing to pay that rent to the landlord for 15 years. And although that rent is going to get fully reimbursed by the NHS, that is only on the proviso that you continue to provide medical services. So if the surgery were to close for whatever reason, or you couldn't continue to operate, the NHS would no longer pay you the notional rent, but you would still be liable for the rent to the landlord. So it's just important for you to consider, and something to think about is, yes, there's a huge benefit to signing a long-term lease because it's going to increase the value of the premises, but the downside to signing a long-term lease is it's increasing your liability. So it's just, if you think there's any chance that perhaps the surgery is not going to be there in 10, 15 years, then you might want to consider perhaps signing a shorter term lease, or even putting break clauses in the lease, which will allow you to break the lease without penalty or with a reduced penalty. So yes, something to consider as well. But if you consider going through the process, your agent or your representation should be able to assist you with your options around those anyway. Something else to consider is your early redemption penalties. So effectively the penalty levied by your mortgage provider for paying off your mortgage early. So it's their loss of interest effectively. So if you ring up and say, we're paying off our mortgage, they'll say, right, you owe us X amount of money. So it's just worthwhile speaking to your mortgage provider to find out what those early redemption penalties are. They were absolutely astronomical. So Aviva were horrendous for early redemption penalties. So if you're with Aviva, you'll certainly get a bit of a shock, I would have thought. But they are coming down, the early redemption penalties, because effectively they are in relation to the interest rate that you signed your mortgage at and the current interest rate. So as interest rates rise, as they are doing now, your early redemption penalty should reduce. So if you've had an early redemption penalty quote 12 months ago, it might be worthwhile actually ringing up again, because you might be pleasantly surprised that although there is still an early redemption penalty, it might be significantly less than it was 12 months ago. But either way, it's just worth speaking to the mortgage provider and finding out what those charges will be. Number 5, so you must have at least 2 signatories on the lease at all times. So if there's 5 GP partners, all 5 partners want to sign the lease originally, that's great. Actually, the first 3 partners could leave scot-free without having to find anybody to replace them on the lease. When you get down to those last 2, the second to last partner that wants to leave is going to have to find somebody to replace them on the lease. Otherwise, ultimately, they'll remain liable for the terms of the lease until somebody replaces them. So it's almost like a last 2 people standing rather than a last person standing. What a lot of practices do who have multiple partners is they will alter their partnership agreement in line with the sale and leaseback, which you'll probably need to do anyway, because you're going from being an owner-occupied premises to a leased surgery. So you'll probably have to alter your partnership agreement anyway. And you can actually write into that agreement that although the landlord stipulates that they only require 2 signatories, in your partnership agreement, it could say that every partner that leaves has to find somebody to replace them. Otherwise, they'll remain liable on the lease. And it just means everyone's going from the same point of view, and it means there's 0 chance of you ever getting down to those last 2 signatories. And another point with the 2 signatories, if you're a single-handed GP, you're going to find it very, very difficult to sell the surgery. You probably could find an investor, but there's very few investors that are going to want to purchase a premises with just one GP signature. So it's probably worth certainly looking to see if you can add another GP signature, or even just a partner signature, getting a nurse to sign, getting a practice manager to sign, perhaps, just to reduce that liability. Like I said, you probably could, at a push, find an investor who would be willing to purchase with one signature, but they're going to be wanting quite a lot of money knocked off the value of the premises. So it's going to have a significant detrimental effect on the value of the premises with just one signature. So yeah, a minimum of 2 is ideal. Other things to consider, so your potential tax implications, so capital gains tax, stamp duty and things like that. It's worth getting advice from a specialist accountant, a primary care accountant, who will be able to advise what those implications are from a tax point of view for selling the surgery, but also putting that lease in place as well. And then in terms of the process, so the process of going through a sale and leaseback, the first thing you'd need a specialist surveyor to come out and value the premises to determine what the surgery is worth on the open market. That surveyor would then have discussions with the partners to understand what lease terms that they're happy to sign up to, so the length of the lease, what the repair obligations are, etc. Once that's all been agreed between the partners, those heads of terms, that starting lease would go off to the NHS for approval. So the NHS have to approve all leases. That's very, very important. Once the NHS have approved the lease, then it's a case of going to market and negotiating with any interested parties. So that's kind of the sale and leaseback side of things. The next option, an alternative option to sale and leaseback, is putting a lease in place yourself. So rather than upon retirement selling the surgery to an investor, effectively you would become the investor, you would become the landlord. The retiring GP would own the premises and lease it to the remaining GPs, which is an option ultimately as opposed to selling the surgery. So if you upon retirement you want to retain your assets, you want to keep the surgery and keep the income, then putting a lease in place is a great alternative option. And there's a few things to consider when you're putting a lease in place between connected parties, or putting a lease in place at a GP practice. The first thing is to ensure that the NHS the lease is an NHS GP surgery lease. Very, very important that it's a specific NHS GP surgery lease, because they are very different to just standard commercial leases. And we know this because we've seen far too many standard commercial leases in primary care, and they're just not fit for purpose. Effectively, they're not relevant for primary care, because on a standard commercial lease, standard commercial property, you have a landlord and you have a tenant. In the NHS, in primary care, you've got the landlord and tenant, yes, but then you've got the third party being the NHS, and there need to be specific clauses around what the NHS's involvement is with that premises. For instance, the NHS are going to be fully reimbursing you for the rent. That has to be stated in the lease. The rent review has to be stated in the lease. It has to be clear that it's the NHS that will be undertaking the rent review, etc. So very important that it's an NHS surgery lease. Also very important, as just mentioned, that lease is approved and ratified firstly by the district valuer, who will do a value for money report to effectively make sure the lease is valued for money for the NHS, and then get the NHS to approve that lease. So the NHS will not approve a lease that is not a specific NHS GP surgery lease, for starters. So very important that. But yes, every lease should be approved. You can proceed without an approved lease, so it's not impossible to go ahead with an unapproved lease. The issue being is, as from a landlord's point of view, is when you go to instigate a rent review, the NHS will not entertain a rent review if they haven't approved the lease. So effectively, the rent will remain the same for the duration of that lease. So it's very, very important that you get the NHS's approval. Otherwise, either A, from a landlord point of view, the rent's going to stay the same for 15 years or for however long that lease is, or B, from a tenant's point of view, technically the landlord could increase your rent, but the NHS aren't going to fully reimburse you because they haven't approved it. And this is what I was talking about earlier about some horror stories where we've had practices who are paying 30-40% more to the landlord. 9 times out of 10 or 99 times out of 100, it's because they never got their lease approved by the NHS. A, they never got it approved by the NHS. B, they never got any assistance or support from specialist primary care organisations. They'll have used a solicitor, but not a solicitor who has experience in primary care. So it's very, very important that you get the correct representation, but also get that approved by the NHS. One of the things that's very important as well, one of the things we see quite often when partnerships split up and one retires and they're leasing it back to a number of other partners, we often see favourable terms in there. So what I mean by that is terms where perhaps it's just a 12-month rolling contract or rolling lease, or it's a 10-year lease, but it gives the opportunity for either party to break that lease every 12 months. And that's all well and good. That's fine. That's an agreement between the two parties. The issue with clauses like that is they do have a significant detrimental effect on the value of the premises. So it's very important that, okay, you're putting a lease in place now because you want to retain the asset, but just consider that in 5-10 years time you might change your mind and you want to sell the surgery. So you need to just have that in mind when you're putting a lease in place. Make sure any clauses and any lease that you agree isn't having a detrimental effect on the value of the premises. So just make sure that it's at arm's length effectively. So just almost forget the connection between the two parties and just see it as a transaction and putting a lease in place. And again, that's why it's very important getting representation to assist you through the process. Something else to consider within the lease is clearly stating the landlord and tenant's responsibilities. So again, things like who's going to be responsible for the repair and maintenance obligations. Just clear, if you state it as clearly as possible, it's going to avoid any potential disputes further down the line, which is the whole idea of a lease, effectively, to ensure that if anything goes wrong, it's clearly stated in the lease whose responsibility it is, to avoid any costly disputes further down the line. Also, number 5, so check the conditions of your mortgage over the property. So when you put a lease in place, some mortgages will have conditions that state the surgery has to remain as an owner-occupied practice and not a leasehold premises. So there may be restrictions and conditions in the mortgage. And if it does state that, your mortgage provider will probably ask you to reapply for a mortgage. So it's a relatively straightforward process, but these days, for instance, if you've signed up to a mortgage with a 1% interest and you're having to renew because there's restrictions in there, and all of a sudden it's jumping up to 5-6%, then it's going to make a significant difference to your monthly payments. So again, when you're putting a lease in place, just make sure you speak to your mortgage provider, and find out and ensure that there aren't any restrictions or conditions to prevent you from doing so. And then again, tax implications as well. So there will be tax implications for putting a lease in place. So just get professional advice, specialist accountant, just to find out what your liabilities are. Okay, so that's putting a lease in place. Something slightly different, transferring the contract to another entity, which I've explained very briefly just earlier on. But effectively, this option is great for failing and struggling surgeries or those who might be facing closure due to retirement. So there are a lot of organisations out there who can prevent this from happening effectively. So you've got companies like PCNs and GP federations now can take over contracts. So they can be leaseholders and contract holders of medical services. Again, local practices, so you could merge with a local practice who could take over the contract, take over the lease. There are specific third-party organisations now as well. These organisations seem to be popping up almost on a weekly basis, but they basically specialise. You've got companies like Operos or Harley Street or GP Consultancy Alliance, all organisations who assist practices, and rather than having to close the surgery, they can take over the contract and take over the lease as well. Also employee-owned trust or NHS Foundation Trust as well. So there are plenty of options out there for you. What a lot of practices are doing, certainly with ourselves at the moment, when they go through a sale and leaseback, they don't actually want the liability of holding the liability of the lease. So we are actually simultaneously selling the surgery and then transferring their contract to another entity as well. So the GPs effectively have gone from owning the premises and being GP partners to selling the surgery. They're relinquishing their partnership as well. Another organisation's coming in, taking over the surgery and actually employing those GPs as salaried or locum GPs. So these GPs had enough, shall we say. I think they were just very, very stressed with everything that's going on in primary care, like a lot of GPs, I think, up and down the country, and they just wanted a simple life, salaried GP, locum GP, just didn't want the hassle of holding the contract and running the surgery. So there are certainly options out there for you, and it's great for a sale and leaseback transferring the contract, because as a GP partnership, you might be unsure about signing up to a 15-year lease. You could potentially sign up to a 15-year lease, but then in 5-6 years time, as 2 or 3 partners have left, you could explore perhaps transferring the contract and a third-party organisation coming in, taking over the contract and taking over the lease and therefore the liability as well. So certainly an option worth exploring at some point, I think. Okay, last slide. So how to maximise the value of your premises. So in anticipation of selling the surgery, there are certain things I would probably advise doing before you go through the process. One of the first things to do is get your notional rent checked by an independent surveyor. So just check to make sure the notional rent you're receiving is in line with the current market. Make sure you're not getting underfunded. It's probably advisable, whether you're selling your surgery or not, to get that checked, just to make sure that everything is correct, make sure it is in line with the current market. You should do that every 3 years, but certainly before selling, it's imperative that notional rent is maximised. Also, things to check is any lease agreements that you have. So if you rent any space out to pharmacists or dentists or chiropractors, whatever it may be, just making sure those leases are up to date, and again making sure any rent reviews have been undertaken and the rent is maximised as well. If you have any spare space, which everyone seems to find amusing when I say, I don't think anybody has any spare space at the moment, but if you manage to magic some spare space from somewhere, it's potentially looking at getting that reimbursed for notional rent. So if you're not getting notional rent for it, seeking approval from the NHS to get approval for notional rent, or looking at renting it out alternatively. Again, pharmacists are great, dentists, whoever it may be, looking at renting that out, putting a lease in place and getting a regular income and increasing the rental income of the premises. And then things like upgrades and improvements as well. As I said, a lot of investors are very keen on maximising their return of investment by upgrading and improving the surgery, because that's going to increase the notional rent, which is going to increase the value of the premises. So you could potentially do that in anticipation of selling the surgery, is look at upgrading and improving the surgery yourself, or even building an extension, which is going to increase the value of the premises. Ultimately, when it comes to maximising the value of the premises, we're really just talking about the rental income, because if you can increase your rental income of your premises by even as little as £1,000 a year, it's going to increase the value of the premises by 10, 15, even £20,000. So even small increases in rental income can have significant impacts on the value of the premises. And that's just about it for me, really. So yeah, obviously, whatever you decide to do, it's imperative that you receive the correct advice from specialist surveyors, accountants and solicitors, just to ensure that you get the right decision. So before you make any decision, there's plenty of free advice out there for you. Ourselves, BW Healthcare Surveyors, we're always on the end of the phone, more than happy to have a conversation with you, but we're not the only ones. There's plenty of other surveyors. There's certainly plenty of solicitors and accountants where you can just pick the phone up and just use us all for as much free advice as you can get before you even have to worry about putting your hands in your pocket. So if you do have any questions for us, I know we're going to have a quick Q&A at the end, but if you think of anything further down the line, my contact details are there. More than happy for you to drop me an email or give me a call any point.